Welcome back, traders. It's Cristina Barthenidu, and I've got some exciting technical developments to break down in euro dollar, pound dollar, and Bitcoin. Markets were fired up yesterday, especially after the private ADP employment report out of the US showed a surprising 32,000 decline in private employment compared to expectations for an increase of more than 40,000. Well, that surprise landed just right on time to ramp up pressure for December rate cut ahead of next week's FOMC policy meeting. And of course, the reactions were immediate. The euro, the British pound, and Bitcoin all surged significantly on the back of a falling US dollar. The question now is, could this recovery phase still gain more legs? So having a look first at the euro dollar, we can see that the pair is finally above the 1.1650 level following yesterday's increase. That is the, let's say it's the neckline of this pattern over here, which looks like a bullish double bottom pattern. So given the fact that we have closed above the 1.1650 threshold, that could increase positive pressure, and the technical indicators over here suggest that there's still some room for improvement, as the RSI has yet to peak above its 70 overbought level. The stochastic oscillator is above 80, but it has yet to top in the overbought territory. So that suggests that this bullish action could still continue, and looking for resistance levels, I think that the next barrier could come around 1.1730, a break of which could take us up to 1.1810, last seen back in September and also in June. Then beyond that, all the attention will turn to the 1.19 and 1.1960 territory, where the price topped back in September, hitting a 4-year high. And there is a former support trend line adding extra importance to this territory, so expect a challenging battle to develop within the 1.19 territory. Now, for the bullish action for the pair to sustain its bullish action, it has to hold above 1.1650, or at least stay above the 1.16 level where the 50-day moving average is placed. Otherwise, we could see a decline towards the 1.1465 and 1.1510 level where the 200-day moving average is placed. Of course, given the continuous bullish sessions, there's still some, obviously a breakthrough could take place, but any declines may not be concerning unless the price breaks below 1.16. Then, in the event that the 200-day moving average fails to hold as well, in which case we could see the price printing new lower lows and extending this downtrend, then probably the next pivot point could come around 1.14. And now looking at pound dollar, we can see a similar situation here. Pound dollar had an amazing session yesterday, one of its largest daily bullish actions in a while. It's what's striking here is that the price has managed to close above its 200-day moving average. It's currently trying to find support around this line, and we also have a kind of a bullish double bottom pattern over here. And since we have surpassed the neckline at 1.32, we could see extra bullish actions. Of course, a break above 1.3365, which coincides with the 50% Fibonacci retracement level of this down leg, could confirm additional gains, likely towards the 1.3450, while higher than that, the 1.3585 zone could be the next obstacle. Now, as in the case of euro dollar, we don't have clear overbought signals. Of course, the indicators are close to overbought levels, but they have yet to peak in the overbought territory, so the bias is still positive. Nevertheless, we should be well, some caution is necessary, and if the 200-day moving average proves fails to hold, then the price could extend today's soft decline back to 1.3280. Failure to hold here could then drive us back to the neckline territory between 1.3178 and 1.32. And then additional declines from here could revisit this broken resistance trend line near 1.3070 before we head towards the 1.30 psychological mark. And finally, looking at Bitcoin, we can see that the pair also, we can see that the cryptocurrency has also finally surged following the dip to the 83,000 territory. It's now back near the one. It's currently trading near the 93,915 territory, and that's currently a key barrier to the price. It also coincides with the 61.8% Fibonacci retracement level of the April to October upleg. So the price could face some consolidation near the 93,915 level. If not, then we could see a continuation towards the 97,620 and 99,000 territory, where the 50-day moving average is placed. Well, the latest bullish action has been quite encouraging. It suggests that perhaps the price is set for its next bullish actions, especially after hitting the lowest level since April. The technical indicators, however, are not completely in the bullish territory yet. They are sized around 50, and the stochastic oscillator is already entering the 80 overbought territory. So Bitcoin will probably need a strong bullish catalyst in order to surge beyond 99,000 and therefore shift the bias back to positive, in which case the next target could be the 105,750 zone, where the price paused a couple of times from September onwards, and that area was also a key barrier in previous sessions as well. Now, in the event that that the price fails to climb above the 93,950 level, perhaps it could reverse lower to seek support around 90,200. If that area proves fragile, then the decline could extend back to the 83,400 zone, a failure where a violation of which could then signal further bearish continuation and another test probably near the 83,578 zone. So the bias is the latest development is encouraging, but in this case, in the case of Bitcoin, we would like to see more upside, particularly above the 93,950 level, and then beyond the 99,000 territory, in order to call for a clear bullish trend reversal. So that's all from me. Thank you for watching, and wish you have a great trading session. We'll be back soon with more technical updates. Bye bye for now.